Welcome to today's market report.
The European Central Bank raised interest rates for the ninth consecutive time on Thursday and kept the door open for further tightening as stubborn inflation and a growing risk of recession pull policymakers in opposing directions. Fighting off a historic surge in prices, the ECB has now lifted borrowing costs by a combined 425 basis points since last July to their highest since 2000, worried that excessive price growth could be perpetuated via wage rises as the jobs market remains exceptionally tight. We're moving to a stage where we are going to be data dependent, and we will take the new projection by staff and more inflation about how transmission is taking place, and on the basis of that we will determine whether we hike or whether we pause, said ECB chief Christine Lagarde. The euro fell and was down 0.5% on the day at 110.26 versus 111.26 just before the statement. Eurozone government bond yields fell. German's 10-year bond yield was down 5 basis points at 2.41%, having stood at 2.43% just before the ECB rate decision. Italian yields were also 5 basis points lower at 4.06%. The broad European Stoxx 600 index rose and was last up 1.5%. The Eurozone banking index gave back initial gains and was last up 0.5% after the ECB cut the interest rate it pays to banks on their minimum reserves to zero. In a very slight but important tweak to the wording of the statement, the ECB has opened the door to a pause in September, but it will depend on the data, and Friday's inflation data might tell us more about the potential for a September hike than the ECB press conference. Sterling dollar followed euro dollar lower on strong US data and the ECB's dovish hike. The pair dropped from 129.95 to a low of 127.81. This is today's market report. Thanks for listening. We'll see you next time.